Christmas Eve. The system breaks. It is December 24th, 2025, Christmas Eve. Across the Western world, families are wrapping presents, roasting turkeys, and boarding last-minute flights home. Wall Street is technically open for a half day, but the trading floors in New York are empty. The lights are dim. The volume is thin. The bankers are supposed to be in the Hamptons. Everything is supposed to be quiet. But I need you to stop what you're doing. Put down the wrapping paper. Look at the screen. Because while the West was sleeping, the East just broke the global financial system. Ladies and gentlemen, Asian guy here. No hyperbole, no clickbait, no exaggeration. What we are witnessing right now are mathematical impossibilities occurring in real time. Events that should not be possible in a functioning market. The global pricing architecture for silver, an architecture that has survived wars, currency collapses, and decades of financial engineering, has just failed. And almost no one is paying attention. 3:30 a.m. Eastern Time, Shanghai detonates. At 3:30 a.m. Eastern Time, the Shanghai Gold Exchange, SGE, and the Shanghai Futures Exchange, SHFE, opened for trading. They didn't open normally, they exploded. The price action in the first 30 minutes wasn't just unusual, it was unprecedented. The kind of move that makes risk managers wake up in cold sweats and emergency phones start ringing. We warned you this was coming. For months, we documented the growing divergence between East and West. We showed you the vault data. We showed you the export flows. We showed you how China was draining physical metal while New York played paper games. Two tectonic plates drifting apart. But what happened today is no longer a divergence. This is decoupling. The number that ends the system. Look at this carefully. $77.89. That is the price of silver in Shanghai today, converted into US dollars. Not yuan, not theory, not a paper contract. Real dollars, real metal. Now look at New York. COMEX silver is trading around 72 to 123 ounce. Do the math. 77.89 minus 72.23, $5.66 per ounce. Let that sink in. A $5.66 spread between the same metal trading on two major exchanges on the same planet at the same time. This has never happened in the modern precious metals market. Not in 2008, not during COVID, not during flash crashes or geopolitical shocks. Historically, price differences are measured in cents, maybe $1 or $2 for minutes during extreme stress, but $5.66 for hours. That's not a spread, that's a crime scene. Why arbitrage is dead under normal conditions, this gap would vanish instantly. Banks would buy silver in New York at $72. Ship it to Shanghai, sell it at $77.89. Pocket risk-free profit. That's arbitrage. That's how global markets stay aligned. So why isn't it happening? Because they can't move the metal. The $72 price in New York is a paper number, a promise, an IOU. When someone tries to turn that promise into physical bars, the system collapses. Shanghai is the real price. New York is fiction. The bridge between paper and reality is gone. The screaming signal, negative. 7.18%. Now listen carefully. This is where the panic becomes undeniable. The one-year silver swap rate minus U.S. interest rates just collapsed to 7.18%. That number is flashing blood red. Normally, future silver should be cheaper than spot. Storage, insurance, opportunity cost, this is called contango. But today, the market is inverted. Buyers are paying a 7% premium to get silver right now instead of waiting a year. That is not speculation. That is desperation. This is called extreme backwardation, and it only happens when buyers believe the metal will not exist later at any price. Who is buying at any price? Not retail investors. This is industrial panic, solar manufacturers, EV producers, electronics giants, companies that cannot function without silver. If they don't get metal today, factories shut down tomorrow. Contracts fail, billions evaporate. These buyers are price inelastic. They will pay $80. They will pay $100. They will pay $200 because the alternative is collapse. The banks are trapped. Bullion banks are short silver. They sold contracts at 65 savos, 68 at $70. As long as New York stays disconnected from reality, losses are manageable. But if COMEX is forced to converge with Shanghai, they don't lose money, they go bankrupt. So they suppress the paper price. And that creates a doom loop. Suppress New York prices, widen the Shanghai spread, incentivize physical drain vault inventories collapse. Delivery failure becomes inevitable. This is liquidation, not correction. Vault data. The smoking gun COMEX registered, silver has plunged to 127.2 million ounces, down over 33 million ounces from earlier this year. But the last 48 hours tell the real story. Asahi refining, 1.42 million Oz JP. Morgan, 597,000 Oz. CNT, $228,000 Oz. StoneX, $25,000, millions of ounces gone during all-time highs. That is not selling. That is withdrawal. That is a bank run. The power shift is complete. For 50 years, London and New York dictated the price of silver. That era ended today. Shanghai is now setting the price. New York is a discount store running out of inventory. And when the metal is gone, the price on the screen doesn't matter. A price without metal is just a lie. Final word. They can halt COMEX. They can change rules. They can freeze paper markets. But they cannot halt reality. Silver exists. Factories need it. The East is bidding for it. And the West no longer controls it. This is not a warning. This is the event. I am John A.G. Thank you for being part of this movement. Like, subscribe, stay awake.